Good morning and welcome to NYSE TV Live. I'm Trinity Chavez in studio at the New York Stock Exchange. Now, a busy week rolls on this morning. Investors are digesting earnings over the past 24 hours from NYSE-listed companies like Ford, Eli Lilly, and Roblox, while anticipating major news when Amazon delivers its quarterly figures later on this afternoon. Wall Street is also preparing for Friday's jobs report, which will reveal how the U.S. job market is faring in January, while potentially impacting the Fed rate cut timeline later this year. Amid the flurry of news, the major averages ended Wednesday's session in the green for the second straight day, while the price of gold reached a new record fueled by ongoing trade tensions. Meanwhile, let's take a look at what's on tap over the next hour here on NYSE TV Live. The Stagwell Marketing Cloud, designed for the modern marketer, is using generative and predictive AI, machine learning, and augmented reality in an effort to revolutionize the space. Stagwell CEO Mark Penn will join me live to tell us more. Meanwhile, as tariffs by the U.S. and China threaten to escalate trade tensions between the two nations, former U.S. government official Christine McDaniel sets the scene for what we can expect. Elsewhere, cryptocurrency and decentralized financial platform Telcoin has been granted approval to open Nebraska's first digital asset bank. Patrick Gerhardt, president of banking operations for Telcoin Bank, joins me to explain how this will benefit users. But before we get into all of that, let's take a look at the latest market action, as we always do on NYSE TV Live. Joining me now for more on what to expect in today's session as this week rolls on is Chris Versace, Chief Investment Officer at Telematica Research and Portfolio Manager for the Street Pro Portfolio. Chris, it's great to have you in studio.
Thanks for having me.
Now, we're mid-earnings season. It's indicating a lot of how various industries are doing. Talk to me about what the biggest takeaways so far for you have been.
I think by and large, earnings season has been better than expected, but we've also seen a fair amount of companies that have only just delivered what the market was expecting kind of come under some pressure. So it really tells us that, no surprise, given the run-up that we've seen in the marketplace, in order for a stock to really move higher on a sustained basis, you have to kind of deliver that upside surprise. But I think in terms of areas that we're seeing strength, there were a lot of questions around big tech earnings, but what have we seen? Very strong numbers, in my opinion, out of the tech sector, really reinforcing the fact that we are early innings on AI adoption. And I think when we look back, we're going to say, wow, not only was AI adoption strong, so strong that Microsoft, Google, and others were capacity constrained, but we're going to continue to see the flow through of strong capital spending to areas that folks were having a lot of questions on, like, for example, NVIDIA.
And all eyes are going to be on Amazon's earnings later on this afternoon, but does competitor, Google's parent company, Alphabet, their earnings are going to be released on Tuesday. Talk to me about how it's going to paint a picture on how Amazon's cloud business is doing.
So I think the big thing that we've learned, right, between Microsoft, which said back in September that, hey, we're capacity constrained, right? We're delivering 30% revenue growth, but we can't do any more because we need to bring more capacity on over the next 2 quarters. So they telegraphed, rather large capital spending for their fiscal 2025. Flash forward, they reiterated that, and then on top of that, Google delivers very good cloud growth, but they too are capacity constrained. So you step back and you say, wow, this AI adoption, it is happening. We're still in early innings, but it's probably happening faster than a lot of people realize. So when we hear from Amazon tonight, if they say the same thing, which I suspect they will, it's going to mean that they too are going to be lifting their capital spending expectations for 2025. So all in all, robust data center growth, robust cloud growth, robust growth in AI and cloud services. So all very good for big tech earnings in 2025.
Speaking of big tech and Amazon's platform, I do want to ask you how you think the implementation of these tariffs between the U.S. and China will impact this sector, specifically, broader e-commerce companies like Amazon.
Well, I think it's a great question, right? Because when you look at Amazon, one of the areas that they've been very successful in has been fashion. Right, and really taking that from traditional brick and mortar retailers. So it is something that we're gonna have to watch on their earnings call. I suspect, though, that given President Trump's comments since the election about the potential tariffs, that we've probably seen some pull forward, not just by Amazon, but probably by Costco and others as well to get ahead of this. Because again, it's it's an uncertain thing, and they will prepare for that, just like we saw in the fall with the potential dock strikes.
And another company that you've been following closely has been Qualcomm. Talk to me about the biggest takeaways here and how you think your insights have impacted the broader macro market when it comes to smartphone and AI PC markets.
So there's been a lot of questions about the tone of the smartphone market, the tone of the PC market, and I think as we look back from comments from Taiwan Semiconductor to Han Hai to other key suppliers that have already reported, we are going to see a nice mid-single-digit growth in smartphone shipments this year, more likely skewed towards the high end. So that bodes well for Qualcomm's business, as well as others in the supply food chain. But the key for Qualcomm is this, Trinity. They are diversifying their revenue stream in a very important way, right? We know that Apple is planning to slowly bring in their baseband, right? Leveraging Apple Silicon, doing it in-house. So Qualcomm has been preparing and telegraphing its move into other markets, notably the AI PC market, IoT, and automotive. And when we look at their earnings report last night, their guidance, they are delivering on that diversification strategy.
And in addition to earnings, investors are also watching closely the January jobs report that is coming out on Friday. But I anticipate, well, you're anticipating a positive reaction. So talk to me about.
Well, I'm anticipating a stronger print than the market consensus. So if we look at it, the current consensus right now, I believe, is around 170,000 jobs. That's down from 256,000 in December. But here's the thing. We look at ADP's numbers, right, for January, stronger, right, and up sequentially. We take a look at the January PMI numbers, whether it's S&P Globals or ISM, it doesn't matter. The fact is that they both showed sequential improvement in employment. So it tells you that we're likely to get a stronger print than the market is looking for. Better than 170, if it's better than 256 or 250, stronger month over month, that is going to be a hot number. Great for the economy, right? More people working, more people earning real wages. But from the Fed's perspective, they're going to be like, we don't need to do anything because the economy is humming.
But if your prediction is correct and estimates come up above what investors are anticipating, how will that impact the Fed rate cut later on this year?
Well, I think you have to remember what Fed Chair Powell had to say, right? He said, we need to see sustained progress back towards 2%. So sustained is the key word there, meaning it's not going to be 1 month, 2 months. They're going to want to see 3 or 4 months, especially when you trace the data back, right? It's kind of noisy, that sort of thing. So they need to see it moving sustainably, and I suspect they're not going to hang their hat on any one indicator. So seeing a lot of different data in aggregate move that way. You look at the timing, right? So if we get a very hot print on top of the inflationary pressures that we saw in the PMI reports, I suspect that the market's expectation for a June rate cut is going to get bounced back into the second half of the year.
A lot to look out for. Thank you so much. Again, Chris Versace, Chief Investment Officer at Telematica Research and Portfolio Manager for the Street Pro Portfolio. Thank you for joining us. Reach and surpass expectations with the help of emerging technology. Stagwell Chief Executive Officer Mark Penn is joining us to tell us more about it.
Today we're taking you behind the scenes of Summit One Vanderbilt. This extraordinary destination offers stunning views and immersive experiences, providing a truly unique perspective on a city that never sleeps. That was the most incredible elevator ride I've ever experienced.
Yes.
How long did it take us to get up here?
35 seconds to go from the ground floor all the way up to the 91st floor. It's pretty incredible.
Pretty incredible, and the experience starts the moment you step into the elevator.
Absolutely. We take you from one room and one experience to another to help transition you. And right now in the Hall of Light, we're about ready to go into Transcendence. You ready to go in?
I'm ready.
Perfect.
Let's go.
Let's do this.
Wow, this room is amazing.
Wow is right. We are in Transcendence. We are on the 91st floor here in One Vanderbilt. And this room truly is spectacular. It's probably one of the most Instagram locations in the entire world. We are in probably the most famous and most sought after room in all of Summit. We're in Affinity. And what this really speaks to is Kenzo's vision of play. By no means is One Vanderbilt or Summit an area of being passive. We encourage you, we want you to be part of the installation. Here, you become actually involved within the installation of the space. Obviously, from the balloons themselves, people that come into this space are able to make it their own. They're able to come through and actually see the world in a much different component. They really are. It's a unique view that you're not going to get anywhere else in the world. I would even encourage you, quite frankly, to help come through with me. So we have people who come here who automatically know where they want to stand, what they want to wear, and quite frankly, the type of picture they want to take, because they know it's going to be shared all across the world. And that's the most amazing thing here. People are evangelizing the product for us. They're evangelizing the Summit brand. And in doing so,
welcome back to NYSE TV Live. I'm Trinity Chavez in studio at the New York Stock Exchange. Now, marketing is evolving fast, and AI is playing a bigger role than ever before. Stagwell is leading the charge with its AI-powered marketing cloud built to help brands scale and stay competitive. So what sets it apart? Well, to find out more, we are going to talk to Mark Penn. He is the chairman and CEO at Stagwell. Thanks for joining us today, Mark.
Thank you for having me.
So let's just start by talking about how Stagwell Marketing Cloud fits into the company's broader strategy.
Well, we believe from a strategic point of view that at Stagwell, we're going to provide everything related to marketing from global full service down to tech platform self-service. Because principally, it's very much the same customers who decide certain brands need global full service and other brands can really do it themselves. And we want to supply the entire spectrum. And of course, I'm coming off of being Chief Strategy Officer at Microsoft, and Steve Ballmer is our core investor. So we have a deep understanding, really, of how to apply this new technology to marketing.
Yeah, talk to me more about that. What market gap does Stagwell Marketing Cloud really address, and how significant is the opportunity in this space?
We've been working on this for a number of years, and it's really infused by AI now. And the Stagwell Marketing Cloud is a series of apps that someone in communications, in research, or in media and general marketing can use to manage thousands of pieces of content, to have their focus groups and research analyzed, to write their news releases and figure out which reporters or which podcasters will really report favorably on the news events, and then write the pitches. So it's all AI enabled to facilitate the modern marketer to do more with less.
But what sets Stagwell Marketing Cloud apart from competing technology platforms in the industry? We are seeing so many that are currently on the market.
I think you see a lot of individual apps for very small specific problems, or you see some very generalized apps that try to do some of everything. We really, because we've got 4,000 marketing clients, we really understand the specific needs of those clients. We understand the data sets that really need to be used for the training of AI models. And then we really cover specifically those tasks that modern marketers need, which typically is very different from the other apps and things that we're seeing out there.
And how does the SMC suite of tools that you have designed for the modern marketer help Stagwell scale and attract new clients?
Well, because we offer a series of tech-infused services, but some people like to use the tech on their own or have other divisions. And I think it's critically important that the Stagwell differentiation is that we've been more tech-oriented, more tech-first, born digital than the other previously established holding companies. Look, we're 9 years old from inception, from a single person now to 14,000 people, whereas the other companies are 50 to 100 years old and therefore are adapting to these new technologies.
And Mark, with the expansion of your new technology offerings, how has investor interest at Stagwell evolved?
I think Stagwell is still relatively unknown in the investor community. I think we've grown to between 2.5 and 3 billion in revenues and 14,000 people in 40 countries. And we're really now incredibly well known within the marketing community. We recently took on Starbucks, Panera Bread, major accounts from GM. But within the investor community, I would call us, an unknown unknown.
And what would your message to investors be? You say that it's kind of unknown right now, but what would you want investors to know about Stagwell?
I think they really got to see us as a challenger marketing company built from the ground up for the modern marketer, that it's going to continue to grow and take market share over the next 4 or 5 years as we kind of reach this critical point at which some of the largest corporations in the world can really give us significant contracts. And that's what we're seeing happen in the marketplace.
And it wouldn't be a conversation on Wall Street if we didn't bring up AI. I do want to get your take on how you think AI is reshaping the daily workflow of marketing and advertising professionals.
I think kind of the most important thing that's overlooked about AI is that it doesn't just make computation easier. It fundamentally changes the relationship that people will have with brands and technology. You will talk to an AI bot, and that bot will have to have a personality and a character. Just like everything else in the brand, that's going to have to really be the point of connection that people have with brands. And those all have to be built. Right now, brands have word marks and they have themes, but they don't really have activated agents that represent them, and they're going to need thousands of those.
What advice would you give to other CEOs who may be hesitant to fully embrace AI into their business strategies?
I think they have to look at how AI can help the back office, reading hundreds of thousands of invoices, but also look at how it will help the front office, that consumer connection. And don't let it be adapted in a formulaic way or sound like Alexa or sound like other bots and agents out there. It's got to be unique, it's got to be tailored, it's got to be crafted. I believe that it's creativity and technology together that really makes for differentiated experiences. And that's what brands are going to need when it comes to applying AI.
It's all about the experience and a lasting impression. Mark Penn of Stagwell, Chairman and CEO, it's always a pleasure having you on the show. Thank you for joining us.
Thank you.
Now coming up, the U.S.'s trade war with China has a new element, tariffs. An expert will tell us what consumers can expect when the new rules go into effect. That's up next. You both are coming to the exchange today to share the major news announcement. Why don't you tell me a little bit more about it?
Yeah, so we just passed 200 million in annual recurring revenue, and I met you last time 14 months ago when we made the first announcement. And so we're super excited. We're growing 70% year over year. And it's just due to the amazing success that we're providing to our customers.
Abby, would you like to add to that?
Such a whirlwind being at Cribble. I'm so proud of us, and to take 4 years to get to 100 million and then start, double it in 14 months is pretty exciting space to be in.
That's hugely significant, especially the time period that it all occurred. So what would you attribute this momentum to, and how do you think they're going to continue to leverage this fundraise?
First of all, back to the customers, it's about the value that we provide to them. It's an underserved segment. It is people who are running the systems that run the business, and the top growing companies in the public markets are growing at 30%. We're growing at 70%, and it is all back on the value that we provide to customers.
Abby, from your vantage point, how are you going to continue this momentum with growing those client relationships as well as enhancing your bottom line?
Well, our number one value at Cribble is to be customers first always, and we're constantly focused on how can we do the next thing that solves the problem that nobody else is solving for them. And so one of the things that I'm really excited about is that when we talk about our solutions and our ability to provide a data engine specific to IT and security, one of the gaps that we had was that we were able to provide analysis, but not in real time. And we have an exciting product announcement coming up that I'm going to let Clint talk about a little bit.
You beat me to the punch. I'm so excited to hear about the new product. Tell me about it, Clint.
This is an add-on to our Lake product called Lakehouse. As Abby mentioned, the biggest gap was I need to be able to ask and answer questions of data that's arriving right now, and I need that to be fast. I need my dashboards to go quickly. I need my alerts to fire really, really quickly. And so with our new offering in Lake House, we can start.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, the U.S. has recently made headlines again with its strategy of tariffs on China, and the impact of these trade policies continue to be felt across global markets. But as the trade relationship between the two countries remains complex, questions are arising about the effectiveness and the consequences of these tariffs. To break this down further, I am joined now by Christine McDaniel. She is the former Deputy Assistant Secretary at the Treasury Department, Senior Trade Economist at the White House Council of Economic Advisors, as well as currently the Senior Research Fellow with Marquettes Center. Christine, it's a pleasure to have you on the show this morning.
Thank you.
Now, as former Deputy Assistant Secretary at the Treasury, how do you assess the effectiveness of the tariffs imposed on China over the past few years?
Well, the tariffs on China, that's sort of a whole different ballgame than the tariff threats that have been going on over the past few days. But in terms of the effectiveness of the U.S. tariffs on China, you look at the original Section 301 investigation in terms of the complaints of the White House against China. It's not clear that there's been a lot of progress on those major issues. I mean, a lot of these issues are so structural in terms of non-market economy practices. It's not clear that was really ever on the table anyway. But things that were on the table were things like, higher purchases of U.S. agricultural products and, higher purchases of other major U.S. products and goods and services. Some of that has happened. Not all of it has happened. President Trump has ordered a study to look at the effectiveness of phase one of that agreement. So it'll be really interesting to see what they come out with and then how the White House reacts to the findings of that study.
But I'm interested to get your take, Christine, on what you think the long-term impact of these tariffs on U.S.-China trade relations will be, and how do you foresee these relations evolving moving forward?
I think that the U.S.-China relationship is, ever since, maybe 2015, it's always been it started to take a bit of a major turn around then. So if you look at the key big statements coming out of, Obama, Trump, Biden, that, it's always, we'll compete where we can, but we'll protect where we must. And I think both sides feel that way. I don't see that this latest round of tariff threats and the tit for tat is going to be that major. Remember, right when Trump, after his inauguration, President Xi called President Trump, and then that weekend, Vice President J.D. Vance met with his counterpart. So I get this, there's a sense that there's this high level understanding of where the sort of the red lines are on the commercial relationship. I don't think either side wants to ruin that, but there will be certain flare-ups here and there, but I don't think that will be that different from what we've been seeing in the past 10 years. I could be wrong, but I just don't get the sense that President Trump wants to blow up this relationship.
I do want to talk more about those different flare-ups that you're referring to. Do you think these tariffs will lead to unintended consequences?
Well, tariffs always lead to unintended consequences. We saw that with the steel and aluminum tariffs. We saw that with some of the Section 301 tariffs on China. So of course we're going to see that again. 10% is, it's going to be annoying. It's not going to. Remember in the 2018, the 301 tariffs it averaged about 15% tariff against China. And the currency fluctuations absorbed about half of that. So with the Chinese currency depreciating against the dollar about 7%. If that happens again, then we're looking at, maybe a 5% effective tariff. Annoying for sure, not helpful when you're trying to fight inflation, but not necessarily devastating.
I do want to ask you, what specific sectors do you think will be specifically hit the hardest, or who will benefit from the trade policies?
I don't know if anybody will really benefit from a 10% tariff on China, especially since it's across the board. And then with the currency, situation, it might just be 5%. But, look at where our imports from China are, largely consumer goods, retail products, plastics, but then also, chemicals. I mean, what I'm more concerned about is China's retaliation. So they just announced a list of, about 20 or so minerals that they're now going to require export licenses for. A lot of these minerals are used for our defense industrial base and high technology products. I think those would be something much more concerning than the 10% uniform tariff. So, consumer technology, semiconductors, the military industrial base, especially when the U.S. is trying to build up that manufacturing base in country. That I think will definitely harm the prospects of that.
Christine, we have about 45 seconds left, but with your experience at the White House Council of Economic Advisors, I'm interested to get your take on what alternative strategies to tariffs do you think can be effective in addressing U.S. concerns about China's trade practices?
Look, I mean, I don't think China is open to negotiating its non-market outlook or the way of it's doing things. So I think it's really just a matter of the U.S. working with its allies very closely on key priorities, not going too far on the protectionist side, because you're not going to get other countries to cooperate with us if they think we're just looking out for ourselves.
Well, thank you for all of that important insight, Christine McDaniel, former Deputy Assistant Secretary at the Treasury Department, Senior Trade Economist at the White House Council of Economic Advisors, and currently a Senior Research Fellow with the Mercatus Center. Thank you for joining us. Now, don't go anywhere. We have the opening bell up next.
What changed in Unanchored is the advent of geolocation data on cell phones. And this was largely unavailable until, call it 2018, 2019. That data is so robust that you no longer have to only rely on tenant sales that are reported by the tenant. Now you can rely on customer traffic from cell phone data, which is incredibly robust, and it allows landlords to have information that we didn't have before. That, to me, is what really crossed the Rubicon between private investors making a local bet on convenience properties to now institutions, and us being the only public institution, really, being able to make a thesis that has math behind it that I think is convincing and durable. How frequently do you run an errand to go out at lunch and go to Chipotle? Do you go to the ATM at Wells Fargo? Does somebody in your family get your nails done? Do you go to the barber shop? These are running errands. These are not going shopping. For you to run errands, convenience is key. You want speed, access, and you want it to be in a timely manner. What we've really proven, and this is really through the data analytics, is that going shopping and running errands are two distinct, differently property types. And being different property types, they deserve to have their own asset class for effectively running errands. And I'll give you some statistics. 2/3 of the customers that come onto our properties at Curbline are on our asset less than 7 minutes. That's not a going shopping experience. That's not lingering longer. We're not placemaking. We're not making a place where you linger forever or you multiple shop. We want a place that is right up on the road, easy to your house, and you're in and out. That is the biggest asset management question. Do you renew a tenant, or do you replace the tenant? And so this is not an occupancy business where you buy vacant buildings and you lease them up. You're buying fully leased buildings, and the question is always every single year, are you going to renew this tenant, or are you going to kick them out and replace them? And that.
Welcome back to NYSE TV Live. I'm Trinity Chavez. Now, in just a moment, the Association of African American Financial Advisors will ring the opening bell to kick off today's session. Quade is a nonprofit membership organization founded by LeCount Davis in 2001. And the organization says that it has been committed to fostering the professional growth of Black financial advisors, planners, and affiliated professionals, as well as advocate for increased diversity in the wealth management industry. The Association of African American Financial Advisors, we're seeing them all right there on that bell podium as we get ready to open up the markets. Actually, let's tune into that right now. we are officially off to the races. Another day of trading set to begin. It looks like we have a lot of green on the screen as investors are still digesting the earnings data that is coming out ahead of Friday's January jobs report. So another busy session here on Wall Street officially underway. Joining me now to break it all down is Jeffrey Small, president of Arbor Financial. Jeffrey, it's great to have you on the show this morning.
Thank you very much. Glad to be here.
Now, from your vantage point, what's at top of mind for investors today?
Well, there's lots of things. Investors are trying to figure out how to make money in this market at these market cycle peaks, and we have a divergent market with a certain class of stocks carrying the market caps higher and doing very, very well. But now the rest of the market is expected to catch back up. The other 493 undynamic stocks are expected to catch up. And they are starting to grow, actually. The divergence and the market broadening is actually starting to happen now.
Now, investors are reacting to a lot right now. We're talking about earnings. You know, Friday, the jobs report is coming out. Later on this afternoon, we have Amazon's earnings coming out. But I do want to talk to you about tariffs. How do you see tariffs impacting overall market stability in the near and long term? And are we looking at a sustained volatility or short-term shock on the market?
Well, we had a little bit of a short-term shock on Monday when the tariffs kind of hit the airwaves over the weekend, and President Trump signed the executive orders. And, you know, I was really kind of elated because I thought that was going to give us a little bit of a discount in some of the market pricings on some of the high flyers that actually had sold off on Monday. But that's not the case. I mean, as it turns out, the tariffs really aren't that big of an economic effect on the economy. If they were 25% across the board between China, Mexico, and Canada, we'd really see about a 1.4% potential increase in inflation on an annualized basis. It's more like a pinprick at this time on the economy. And so with earnings being strong this week and a very optimistic economy and productivity being high, the tariffs were kind of a non-player here in influencing market prices.
Do you think that there are specific sectors that could be hit hardest by the tariffs?
Well, sure. I mean, the automotive sector, of course, would get hurt. You know, GM and Ford would have some problems. A lot of clothing retailers that you ladies like to shop at would have some problems. And so I think those are really the areas that we would see tariffs make an impact on consumerism. And of course, food products as well would be issues. But, you know, we import about 500 billion each a year from China, Mexico, and Canada. So everything that comes across the border would have that influence. But as a cross-section or a median effect of the inflationary side, we really only be looking at 1 to maybe 1.5% maximum inflation this year. And now, I see the tariffs. I'm sorry, go ahead.
Go ahead. Go ahead. Finish your thought.
I really see the tariffs as a good thing towards slowing down the Fed, actually acting like a pseudo form of Fed action. And, you know, maybe raising prices a little bit to slow the economy down so the Fed could potentially accelerate rates declining, which is really what the market broadening is dependent upon.
And Fed officials are speaking later on this week specifically about the uncertainty of new trade, right? And how these new trade rules could impact, right now and what the long-term ramifications will be. But how could this impact the central bank plan when it comes to rate cuts overall?
Well, you know, if it slows the economy down, Trinity, and the numbers, the economic numbers, the most important vital numbers the Fed monitors are heading in a southerly direction, that will cause the Fed to act maybe quicker. But for right now, they've paused rates. And so for the last, let's say, 7 or 8 months, has the Fed really been in tune with the economy, what's happening with their rate policy? Because the market, the credit markets and the bond marketplace have done the opposite of what the Fed has done. And so I trust the markets more so than I trust the Fed at this time.
Yeah, and the Fed is always a major storyline for investors. But do you believe this week's big dose of earnings mitigates some of these market concerns when it comes to trade policy?
I think they do. I think a lot of companies that are reporting this week, especially in the tech sector, are flush with cash flow. And it's really a CapEx story this week. Everybody's expanding their CapEx. And is this going to continue to be a hardware rally or a software rally? And I think it's going to be both for at least a couple more years.
And we would be remiss if we didn't talk about January's jobs report that is coming out tomorrow. What do you believe that we're going to see, and what could it mean for Wall Street?
Well, I think we'll see just a one tiny uptick in unemployment. Won't mean anything for Wall Street. It will mean that rates on the 10-year will probably fall a little bit, which is good for small caps. There'll be some small cap buying. So if we have a good employment report, it could be good for the market as long as unemployment goes up and the demand for jobs decreases. That'll be a positive sign month to month, back to back, heading in the right direction that the Fed wants and that we all want for them to lower rates.
And with potential volatility between the economy stocks as well as corporate earnings, what are your top investment picks? Are they shifting right now?
You know, I'm a contrarian. When everybody says get out of tech, I buy tech. When everybody says buy something else, I do the opposite. And so I don't follow the herd, but I'll tell you what, I think it's a fundamental story still. You know, the market's been betting on the broadening for earnings to dramatically increase this year, and it was projected to be a projection of at least 15% across the board. I don't believe in that. I don't see that happening fundamentally, and so I'm holding positions that have the best fundamental pictures in tech. Meta is our number one position. They had a 49% increase in earnings. They had a 20% increase in top line revenue year over year, and they are killing it right now fundamentally. And so I think you have to look at the fundamentals if you're going to gauge what your portfolio should look like, as opposed to just betting the market is going to broaden out and earnings are going to increase by 15%, because I think that's a dream that's not going to happen.
What else should be top of mind for investors as we move forward in the coming months?
Well, just paying attention to what the 10-year is doing, because if interest rates fall, the market broadening does better. If rates go up or stay the same, or inflation stays the same because productivity is too high because of the Trumpian economy that we're in and all the things that the Republicans are going to be doing to facilitate the economic expansion of our country, then that's going to be bad for rates and bad for inflation. So it's kind of a catch-22 right now. We're kind of danged if we do, danged if we don't.
Jeffrey Small, president at Arbor Financial. It was a pleasure.
Thank you.
Now, still to come, Telcoin has been granted approval to open Nebraska's first digital asset bank. Patrick Gernhardt, president of banking operations for Telcoin Bank, will tell us why it's so significant and how it will benefit users. Meanwhile, today's bell ringer, Sheena Gray, will join me here in studio to outline the Association of African American Financial Advisors' biggest upcoming goals. And with sports betting continuing to expand in both popularity and legalization across the U.S., Datadome CEO Benjamin Fabry is telling us what we can expect when it comes to betting. So stick around for all of that.
Welcome to Floor Talk. It's great to have you on the show.
Thank you so much for having me.
So, Josie, congratulations are in order. You are part of the Buffalo Bills ownership group. Now, it was a great weekend for you this past weekend.
Amazing weekend, yes.
Had the family with you to celebrate a win. So tell me, what drew you to this opportunity and how does it fit with your goals?
Yeah, so the process started for me actually back in 2018. I originally had set out to put a group together to purchase the Real Salt Lake soccer team. And it was through that experience where I was approached by a representative from the NFL asking if this is something that I'd be interested in, as the league was looking to be more diverse in the type of LPs they accepted. So right away, I fell in love with the opportunity, and it went quickly, but I'm happy it did. And it's an honor to be a part of such a world-class organization.
Now, you're also involved in ventures like TGL, SailGP, and Footy Market. So tell me, how do you choose what to pursue, and what's your vision as an entrepreneur?
I tried to stick to things that I'm passionate about. And Footy Market is a gear exchange where you can buy and sell used gear online. And that one was close to my heart, being that I spent, my whole life dedicated to soccer. And I'm a big fan of emerging sports. TGL is obviously, golf has been around a long time, but TGL is like a new variation of the game, right? Trying to give viewers a different experience. And then SailGP is more of the same. It's something that we've known people are passionate about in terms of sailing, but now trying to package it all as a league and an emerging sport is something different. So super excited at all of my ventures and things that I work on. And, for me, it's another way of being on a team. It replaces being on, a field. So I've been having a ton of fun, and, it's just the start.
And Josie, as you grow your business portfolio, how are you building a legacy that's beyond?
Welcome back to NYSE TV Live. I'm Trinity Chavez in studio at the New York Stock Exchange. Now, Telcoin just made history as the first federally regulated digital asset depository bank in the U.S., bridging crypto and traditional finance. What does this mean for the broader industry, though? Let's ask Patrick Gernhardt. He is president of banking operations at Telcoin. Patrick, it's great to have you on the show.
Great to be on the show. Pleasure to meet you. Thank you for having me on.
So first of all, I do want to talk about this big milestone. Talk to me about the significance of it and how it's going to impact the broader banking industry.
This is a huge milestone, not just for us at Telcoin, but banking as a whole in the United States. We've recently been, as you just stated, approved to become the first digital asset depository in the state of Nebraska, which will allow us to create our own dollar-backed stablecoin, and will be regulated by the Nebraska Department of Banking and Finance. So this is a huge step, not just for crypto, but also for the banking industry in the United States.
But what advantages are coming with issuing stable coins and holding FDIC-insured deposits?
So what we'll be able to do is we will be able to allow customers, like with partner banks, to be able to use their fiat currency in their checking or savings accounts, and through their bank, get onto the blockchain, able to buy our stable coin, which will be EUSD, which will come out when we open up operation. They will be able to jump on the blockchain and use that stable coin for whatever they need to use. And the big thing right here that I think a lot of people are not quite realizing is that, like I stated before, we will be regulated by the Nebraska Department of Banking and Finance, which is huge, not just for us as an industry, giving us validity within the banking system, but also the peace of mind for the customers that we have and hopefully we can bring on board once we start up and running.
And what regulatory challenges did Telcoin overcome, and will others follow, do you think?
A lot of the regulatory challenges just basically come from the current state of the banking industry in the United States in regards to the rules and policies that they have in place. It was a lot of work and a lot of time crafting this legislation back in 2020 with then State Senator Mike and current Congressman Mike Flood and the banking committee here in the Nebraska legislature, going through working with the Department of Banking and putting in what we want to do, what they will allow us to do, and kind of making that work in kind of a harmonious manner, which I think we've done so far and should be able to do moving forward.
And how will this impact stablecoin adoption and the future of finance, do you think?
I think this is one of the many first steps of adopting stablecoins in the U.S. and honestly more so across the world. Everybody's looking at Nebraska right now because we are one of the first states to allow this to happen, and hopefully we become one of the first ones and fully operational here fairly soon.
How have traditional banks been reacting to this? Do you think that they see it as competition or an opportunity for collaboration?
This should be looked upon as an opportunity for collaboration, as you just said. This is something that will benefit not just the general public, the crypto community, but also the U.S. banking industry, bringing it further into the 21st century. Traditional banks should look at this as an opportunity, not just support their customers, but to also support their bottom line, bump it up, diversify what they do as an institution.
Now that the Trump administration is officially in office, and his administration has been very vocal when it comes to cryptocurrency and their stance on that, what impact will this administration have on the broader crypto economy?
It should be fairly monumental. 2025 is looking as of right now, a fairly big year for crypto in regards to rules regulation, not just within DC and what Trump's trying to do, but also within the regulators that regulate all the banks across the United States, whether it's federal or state. It's going to be a good year. I like what I see with the current administration moving forward, putting in people who know, not just are supportive of crypto, but know crypto, understand it, understand the blockchain. And those are the people that can really help us out and move this thing forward.
And now that you've secured this charter, I'm interested to know what's next when it comes to Telcoin Bank.
What comes next? Well, we've not secured the charter quite yet. We've just got approval. We've got some conditions we got to, set forward before we can open up shop. But, we want to start out the year really well. Currently gearing up, to open the doors here, hopefully in the next few months, and then bring in partner banks and really expand our network, not just in Nebraska, but across the United States.
Well, thank you so much, Patrick Gernhardt, President of Banking Operations at Telcoin Bank. Now, coming up, we'll speak with today's bell ringer about her organization's biggest goals for 2025. So stay tuned. Here at Money 2020 in Las Vegas, one of the big key topics of today's discussions and panels, obviously, with blockchain, cryptocurrency, and the regulation around that. Talk to me about what you're seeing right now in the sector.
I think that the sector is definitely maturing, at least globally, to the point of mass adoption. Of course, like we've been seeing this first and foremost in crypto adoption globally, that I think outside of the US, we are seeing a lot of countries, whether it's Europe, Latin America, and Asia, putting fairly good regulation in place. And on the back of that regulation, we are seeing a lot of adoption. I think that the most interesting part right now is that we are seeing a lot of adoption of stable coins for payments, which is very relevant for this conference, of course. But on Fireblocks, now more than 50% of the volume that we are processing, which is about this year, we're going to process $2.5 trillion worth of assets that are going to move through the platform. More than 50%, so 1.25 trillion, is actually stable coins, which is used for international cross-border payments.
Can you tell me more about what your expansion plans are from your vantage point, especially when it comes to DeFi?
DeFi has been at the forefront of what we were doing at Fireblocks. We have several hundreds of clients that are interacting with DeFi through the platform because it gives them better liquidity, better opportunities. And what we are been doubling down on is two main things in DeFi. The first one is to provide secure access and to enhance the security around DeFi. So as most people that are somehow familiar with the space, a lot of the hacks and a lot of the issues that we were seeing in crypto are related to DeFi. So creating the perimeter around the security and compliance that such that it's...
Welcome back to NYSE TV Live. I'm Trinity Chavez. As African-American owned businesses continue to grow and drive economic impact, what's fueling this momentum and how can it be sustained? Joining me now to talk more about it is Sheena Gray, CEO of the Association of African-American Financial Advisors. And fresh off of the Bell podium, you just rang the opening bell. You opened up the U.S. equity markets for the day. How are you feeling in this moment?
I mean, I can't even describe in words how I feel. So excited. Been in this industry for over 2 decades. And so I have seen the bell be rung for many, many years. And this is just the most amazing experience ever.
Talk to me about why it was so significant that your organization was here to ring the opening bell. You came to the New York Stock Exchange.
So we are a non-for-profit. And we were founded in 2001. And so it's just amazing because I think about our founder, who was the first Black CFP. Here we are in the heels of Black History Month. And then at the New York Stock Exchange, ringing the bell. Just a momentous occasion overall, especially thinking about where we came from and where we're going to go in this industry.
Talk to me about the concept of your mission and your goals. What was the incentive behind starting this organization?
So this organization was founded by LaCount Davis. He was the first Black CFP. So very early on, he noticed that, you know, there are not many Black professionals in this industry. He wanted to change it. And so that's how we were founded.
And what are some of the biggest challenges right now that we're seeing in today's landscape, and how have you seen it evolve in, let's say, the past decade?
So I think the biggest challenge right now is making financial planning awareness for our Black community. At Quad A, we have about 3,000 Black and African American financial advisors in our network, and 8,000 of those, 8,000 members overall. And in the Black community right now, we only have 3% represented as CFP designated financial planners. We want to change that.
So what are some initiatives that you're doing to change that moving forward? Can you talk to me about some real life examples?
Sure. So I always like to say we want to make the financial industry sexy again. That's important, right? And so we have to reach our students and our younger, I think I'm a millennial. So the next generation after me and the next generation, we want to make them understand the importance of becoming a financial professional.
But how do you go about educating that younger audience, that younger demographic, you know, because it's so important, as you said.
It is.
This is our future, relies solely on the younger generation.
So what I'm proud to announce is that we just kicked off our SIE Certification Scholarship Program. So we're working with HBCUs such as Howard and Morehouse and other universities to help students get access to the financial industry by completing this certification.
Amazing. And so what's next? Is that going to be your top priority for 2025?
One of them.
One of them?
Our second is women.
Yeah, I was going to say.
You know, since we're represented right now, because
Yes.
representation matters, women.
Yes.
So I think that we need to do better in our community for the financial industry overall for Black folks, but we also need to increase representation with women. And so we just spearheaded a networking group for women, and we had our first inaugural conference last year for women, and it was amazing.
Congratulations.
Thank you, thank you.
You're welcome.
Thank you.
So what is next for you though? What are some milestones that you have achieved that you are very proud of, probably, you know, in the duration of your career with the organization?
I would say it's growing our membership base, but most importantly, making sure that our partners are truly committed and increasing our partnerships. So to date, we have 18 sponsors, 18 financial firms in this climate where DE&I is not sexy, right? We are having our partners commit to us in record-breaking numbers and saying, we want to support the SIE program. We want to support these students who want to go into the industry. And most importantly, we want to support you.
Amazing. It's all about supporting one another and bringing and uplifting one another, right?
Yes.
Well, thank you so much, Sheena. It was a pleasure to have you.
Thank you.
Again, Sheena Gray, CEO of the Association of African American Financial Advisors. Now, in other news, the American Gaming Association announced that history will be made during Super Bowl 59. The company reporting that it expects U.S. bettors to legally wager $1.39 billion for Sunday's matchup between the Kansas City Chiefs and Philadelphia Eagles. However, one platform, cyber fraud protection company Datadome, says that some platforms are susceptible to attacks that can leave bettors without their supposed winnings. Joining me now to talk more about this is Benjamin Faber, co-founder and CEO of Datadome. Thanks for joining us, Benjamin.
Thanks for having me.
Now, with over $1 billion expected to be wagered on the Super Bowl, what are the biggest cybersecurity threats bettors should be on the lookout for?
Indeed, last year, 25% of all Americans bet during the Super Bowl. That's almost 70 million people. That's a huge number. And that attracts all the fraudsters around the planet that want to get their cut of the Super Bowl betting. So they're using very sophisticated bots, so automation software, in order to try to bet against humans, in order to try to scrape the betting odds, in order to try to hijack the user session. And with the rise of AI, it's going to be even more dangerous and sophisticated. So that's the reason why our team at Datadome have tested the leading betting platforms here in the US to test how much they are prepared against those cybersecurity risks. And the short answer is that none of those platforms are actually protected.
And Datadome's research found that every major U.S. betting platform is vulnerable to bot attacks as well. So what are the biggest weaknesses these platforms need to address, do you think?
Exactly. So what we did is that we have tested along all the user journey with the account creation, with the payment, with the checkout and the betting system. And we've seen that even some simple bots are not blocked by those platforms, meaning that they are vulnerable to a lot of threats like credential stuffing, like bots that can abuse CAPTCHA. So what those platforms have to do is to invest more in order to protect their users against all sort of abuse, to make sure that their users are safe with their personal information, with the credit card numbers, etc. And that's the only way for them to be safe, especially with the rise of AI.
And what steps can bettors take to better protect themselves to make sure that they are not in a susceptible position to cyber criminals?
Yeah, sure. So they have to implement some simple security measures. So first, for instance, use one single password per platform. And to do that, you can use a password manager. It's always a good idea to make that simple. The second important learning is to make sure you don't store your credit card information in some unavailable website or software.
And given
you also want to make, yeah.
I was going to say to that point, you know, with the rise of AI-driven cyber threats, especially, and the rapid development of Gen AI, how can sports betting platforms use this technology as well to strengthen their security?
Yeah, so Gen AI, it's definitely a fantastic tool, but it's fantastic on both sides of the battlefront. For attackers, they can use Gen AI in order to create millions of fake accounts, to create millions of fake reviews. And that increased significantly the complexity of the detection. And the betting platform, they can also use AI in order to be able to make more accurate decisions to secure their platform. Because now, thanks to the rise of AI, you can make a decision to allow or block a request, to allow or block a sensitive action like making a payment or check out money. And you can do that at scale by leveraging AI in order to collect and understand what is legitimate and what is not.
Now, if these security gaps, though, if they remain unaddressed, what long-term risks do you see for both the betting industry and consumer trust?
Yeah, of course, it's a matter of trust. When we see all the large data breach in 2024, and that's going to remain even higher in 2025, there is a risk that the legitimate users stop using this platform because they see that there are some risk on their money. They want to use a place that is safe, where they can bet legitimately and not against automated software. You don't want to be a human trying to fight software that will be by definition faster than any human. So it's important to make sure that the traffic is free from automated traffic and that legitimate users can play safely.
Now, we have about 60 seconds left, but looking ahead, what regulatory or industry-wide changes are needed to make online sports betting more secure against cyber threats?
So we've seen that the different local regulations have done a lot of effort in order to make sure that the privacy of users are safe. They also already make the scraping forbidden in some states. And there are more things to do. For instance, the scalping, so it's the activity of fraudsters trying to buy tickets for events, like the Taylor Swift topic. That's something that is illegal now in some states. And I think the different local regulations can keep pushing the regulations to make sure that we prevent these actions and we let the legitimate users being safe on these platforms.
Now, quickly, Benjamin, who are you going to bet on?
So I will definitely support the legitimate users against the fraudsters.
Oh, okay. Well, I hope everyone's going to be tuning into the show. Benjamin Faber, co-founder and CEO of Datadome. Thank you for joining us.
Thank you.
Now, that'll do it for today's coverage of NYSE TV Live. We had an action-packed show. Again, the Super Bowl is coming up on this Sunday, and I'm sure we'll be talking about that and so much more next week. But thank you again for watching from all of us here at the NYSE. I'm Trinity Chavez. Have a great day.
Thank you for being innovators in the market. Thank you for all you do every day to show the world what best in class truly means.
We are incredibly proud to join the ranks of other highly successful companies who partnered with this legendary institution.
What a time to be here. I am so proud of what we're doing.
This is a huge milestone for our business. There's a lot of people responsible for getting to where we are today.
We have a role to play in bridging the gaps that exist today between us.
Not many people get to do something big in this world, and we get to do something truly special.
This
is such a wonderful place to both look back and look forward. I'm so optimistic about what lies ahead. It has been a privilege to be with you.